Bitcoin may have a quiet week ahead, but there's still reason for hodlers to stay on their toes. Celsius is running out of time and money, and I'll tell you which two tokens are making huge moves that you do not want to miss. Here's your Altcoin Buzz news. Hi, I'm Natalie and welcome to Altcoin Buzz. Make sure you are liked, subscribed, and notified when we drop our latest content. And just keep in mind that this is not financial advice. So let's dive into today's headlines and make sure that you watch until the end to get the scoop on two big token updates. Oh, Bitcoin. Despite a volatile few days, the king of crypto is riding its highest weekly close of $24,300 since mid-June. And that high note is highlighted by a quiet week ahead for the token, with no noise from the US federal government and steadily building fundamentals, courtesy of an increase in mining difficulty and higher price levels in the derivatives markets. However, despite a possible quiet week for Bitcoin, we have yet to see the token commit to being up or down. And it doesn't help when miners have been selling their Bitcoin and shaving their bags by about 30% over the last 3 months, and when short-term sellers have been spiking, meaning a possible flush of sellers before some serious hodling. August has been a crazy month for hacks, and Polkadot's DeFi platform Acala is the latest victim. Acala's AUSD stablecoin went bye-bye to $0 after the parachain was hacked on Sunday, where hackers allegedly targeted a bug in the newly deployed liquidity pool and minted nearly 1.3 billion tokens to run off with. So, Acala has still continued to pause its swaps and cross-chain transfers, meaning the hackers are still holding most of those newly minted AUSD tokens. And in the last 24 hours, Acala says that it has recovered and burned the erroneously minted tokens. And AUSD has been able to climb back to the 90-cent mark, have a look, just to get close to its dollar peg. But it still has some ways to go, but it's still progress. So if I told you Celsius Network could be running out of money by October, would you believe me? Well, believe it. The DeFi lender that filed for Chapter 11 bankruptcy in July has let the cat out of the bag, with documents showing that Celsius should be expected to hit about $34 million in negative liquidity in 2 months' time, which would be an 80% drop in liquidity from now until October. And with Chapter 11 bankruptcy filing allowing a company to continue operating while it gets its financials sorted out, it's looking like Celsius may not be able to dig itself out of this hole. Are you shocked? Or did you think Celsius was covering up how bad its crisis has been the entire time? Let me know in the comments. Before I get into the two big token updates, KyberSwap has announced huge rewards to commemorate its collaboration with Chainlink. KyberSwap is giving over $50,000 worth in KNC tokens for liquidity incentives between KNC and Link token pools. The big liquidity pool on Polygon is running on Kyber's new Elastic protocol, which is concentrated liquidity and compounding fees. So make sure you check out this LP and take advantage of Kyber's rewards, as well as the network's first NFT yield farming take on liquidity pools. Alright, so thanks for making it this far in the video. Let's get to what you've been waiting for. Avalanche has been turning heads on the down low. For starters, the smart contract platform has been piling on the growth in a few categories. According to the AVAX Twitter account, Avalanche has hit an all-time high in daily transactions by crossing the 1.5 million transaction mark, with the DeFi Kingdom cross-chain game taking the lion's share of those transactions at nearly 1.2 million. On top of that, Avalanche has made a name for itself as a sustainable blockchain. The network sits with the 14th highest market cap of $7.7 billion and total value locked of over $2.2 billion. And meanwhile, this chart shows that Avalanche has one of the lowest energy consumption rates among the biggest blockchains. And another reason to pay attention to Avalanche is that it's bringing stakers to the network like flies to a light. Last week has brought in over 17 million AVAX tokens into staking pools, topping up those pools to over 264 million tokens. So you tell me, do you think AVAX tokens will explode soon? Drop me your thoughts below. And the other network that we cannot overlook is Algorand. The trading and DeFi network has established itself as one of the OG networks, having been around since 2017. And its scalability, security, and speed gives users the ease to move NFTs and cryptos around, all thanks to its unique pure proof of stake network, where every single token holder can earn between 8 and 8.5% in annual percentage yields. So not only does Algorand reward its hodlers just because, but it also maintains its gas fees to lower than a cent. And those two perks are incentive enough. Now Algorand is releasing a beta net upgrade on top of all of this. So do you have an Algorand bag? Let me know in the comments. That's it for your Altcoin Buzz news update. If you enjoyed this video and want more insights for your crypto investing, please smash the like, subscribe, and notification buttons to get all our latest content. And have a look at the other updates and deep dives on our channel. Here's some videos to get started with. As always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Thanks for watching, and see you next time.